It's gonna be about trading strategies, which is very important, and which is we have been waiting for this since the beginning, all of us. So this is what will be the most exciting one. So let's go and see what we're gonna talk about today. We're gonna give a small introduction about what are strategies. We're gonna talk about the types of stocks. It can be not only type of stocks, it can be types of anything. Okay, you're gonna understand what I mean. We're gonna talk about the trading plan, which is basically a part of the strategy. We're gonna talk about the deployment process. We're gonna talk what happened with GME stock. We all know, and we all, I guess, heard what happened. We're gonna talk about the short squeeze strategy. I'm gonna give you a real strategy that you can use today. And we're going to talk about what is the next step for you to do after finishing this series of workshops. So what we'll learn today, as I was saying, we're going to learn what is a strategy and why it's important. We're going to see what are trading plans. We're going to talk about the process of development of a strategy from the idea generation to testing to optimizing our strategy, and finally to running it with real money. Basically, that's the main goal that we want to achieve. And we're gonna also reveal the reason behind GME stock movement, okay, GameStop, and how could we have predicted that movement, and if we can take advantage of it to make money. You know, if you in stock market, if you can predict the future, you basically made money. So what is a strategy? A strategy is a set of predefined rules, okay, to make trading decisions. Okay, so it's a set of rules. We're gonna see what are these rules, which tells us that you have to trade now, not tomorrow, for example, or where to place our stop loss and take profit. We're gonna talk about all of this. And because these are predefined rules, okay, so the person who will make the strategy, he's gonna put the rules. Okay, so we're gonna put the rules and we shouldn't break our rules. Okay, now this is somehow hard because it's harder to not break rules that you put, right? So therefore these rules cannot be broken. Yeah, can be optimized, okay, but cannot, okay, and but the point is they can't be optimized during trading hours. Okay, so if you have a strategy, you can't optimize it during trading hours when you are trading. That's like you say, oh, you know what, I have to change this about the strategy inside the trading hours. Okay, so you're gonna take that as a habit. Okay, so and taking that as a habit, so you're gonna always change your strategy while trading, and that's basically not a strategy anymore. Okay, because a strategy must be a predefined rules that are strong and remain constant. You can optimize them, but outside trading hours, not during trading hours. Why do we need strategy after all? So we need a strategy to have consistency and increase profits. Okay, so we want to always have it's by law. So because there is no strategy that strategy average above 85. Okay, but the importance of this is to make us have this high batting average, which remain consistent. So my batting average this month was 85. The next month must remain 84 or in that range, 85, 86. It shouldn't like have a big difference. Okay. And we need a strategy to become an expert in analyzing an event that occurred. So let's say a CEO quitted a certain company, okay? So we noticed that the price dropped, for example. Let's take this as an example. So let's say I want to develop a strategy on this idea, okay? Now, after researching, after implementing or testing your strategy, which is basically shorting a stock, for example, when the CEO quit, okay, you're gonna become an expert in this event in particular, okay? So you're gonna, for example, say, no, this time the quitting of the CEO is good because this CEO is bad. So when he quitted, the price will go up because investors will be hopeful and will trust CEO. Okay, so you're gonna become an expert in analyzing a certain event. Okay. Another reason why we need a strategy is to know where is the right place and time to send your order in order to maximize your profit and minimize your losses. I know that now it's not very clear what is a strategy, but as I said, we're gonna give an example and we're gonna see it, and I'm sure it will gonna be very clear. So before diving into strategies, we're gonna talk about type of stocks, okay? And we're gonna see why. So we have two types of stocks basically, and as I told you, it shouldn't, it's not necessary to only be stocks, okay? So what are the two types? It's momentum stocks or momentum cryptocurrencies, momentum commodities, anything, okay? And mean reverting stocks. So let's see the difference. Momentum stocks are stocks that move in one direction, in one general direction. So let's take Tesla over here as an example. This is the chart of Tesla. You see, it's an interval of 1 year approximately, even more. You see that during this time interval, the price is generally going up. So it's going up. Yes, it has some dips or corrections, but the general movement is going up. Okay, it was around 50 or $75 back in 2020. Now it's $661. So it's moving up. As mean reverting stocks are stocks that revert or mean revert around a certain price level, which is usually the average. Now, the most mean reverting element in the financial market are forex pairs, which are currencies. Okay, so this is the euro slash the dollar. Okay, so you can see this is a time interval from 2016 to 2020. You can see that the stock is mean reverting around a price level. Like you can draw easily a line on the $1.1 level, which is perfectly in the middle. Okay, so it mean reverts around this level. When it's down, it goes up, and when it's up, it go back down. Okay. So how do we trade these? So when we trade mean reverting stocks, when it's above the level or the mean, we usually short it, and if it's down, we buy it. Whereas in the momentum stock, if it's going up, for example, we buy it. If it's going down, and it's always going down, we short it. Okay, as you have momentum stocks going action up, you may have stocks that are momentum. Why I use that not all strategies work example of having two shops. Here in the stock market, you have to have more than one strategy which work in each condition. So momentum stocks need momentum strategies, and mean reverting stocks need mean reverting strategies. Okay, you can't mix up. So for example, remember guys in the third lecture about technical analysis, we discussed a strategy which is using Bollinger Bands and RSI. Now, I told you this works only on mean reverting stocks, okay? So you can't use, for example, Bollinger Bands and RSI on Tesla. It won't work well as if you used it on Forex Pairs, for example, or any mean reverting stock. Now, trading plans. Now, what is a trading plan? As you see, a goal without a plan is only a wish. So if you have an idea of a strategy, but you don't have a plan to organize it, it's only a thought. It won't be an action. So without having the game plan or the trading plan, you can't succeed. Okay, you see that in any game in this world, there is always a game plan. For example, in football, the teams always have a game plan before going to the field. Okay, so even if you were very smart, even if you were the smartest person in the world, without a trading plan, you won't succeed. Okay, and trading plans cannot be optimized during trading hours. Okay, so let's take the football game, for example. The team put the game plan of the field. In the field, they only implement it. Even if they are losing, they implement it. Maybe after the first half of the game finish, maybe they change it when they meet. Okay, but during the game, they don't change it. Okay, in the stock market, we are entering the field against the richest and smartest people in the world. Therefore, our strategy needs a trading plan, okay, which is strong and not weak. So we can't change a lot in it, especially during trading hours. What does trading plan include? It includes a description of the strategy. So what is basically the idea of the strategy? For example, if we said quitting of the CEO, we say that quitting of the CEO makes investors anxious about the stocks, so they sell shares, so it goes down. Okay, this is one idea. Type of strategy, is it momentum strategy or is it maximum and the minimum time to hold. So each strategy have different holding periods depending on its logic. Okay, we have entry signals which actually tells us that now it's the best time to buy. Remember, guys, in the technical analysis workshop, I told you that these candle patterns, I told you these are not strategies, these are signals which help us. Okay, so here there come strategies. They are a part of a strategy, a small part. As you see, the trading plan is very big. They are a small part of the trading strategy. Okay, which tells us now the time to buy. So let's say our strategy tells us to buy stock X. The signal, you have to buy it now, and signal also tells us when to sell it, for example, or close our position. Position sizing is we discussed the previous workshop. It's how many shares we should buy. Okay. And usually it's the same for all. The risk management is always 2% trade. In dollars. The selection, this is very important. So let's say our strategy works on, again, the quitting of CEO. So I need to select stocks where CEO quitted. So this is the stock selection. Now it's not as simple as sound, okay, but I'm gonna give you an example to understand it more. And finally, we have the bailout indicator, okay, which maybe strength. Okay, so the example, guys, can you?
Marwan, can you try to repeat something because you were lagging a little bit?
Okay, yeah, I'm gonna repeat. I was talking about the trading plan over here. So I was saying that the strategy is simply the name or the description. The style, it can be trading, swing trading, investing. The type can be momentum, mean reverting, event driven. Event driven is an event. Okay, so our example of CEO quitting is an event driven strategy. The holding period is the minimum and maximum time. Okay. The stock selection is fundamental criteria. We're gonna discuss this more. Entry signal a set of criteria that tells us that now it's the perfect time to enter the trade. Entry style, it can be aggressive or passive. So aggressive is a market order. For example, I want it now. Or a passive order, it can be a limit order. So I want it not now on a certain price. And we have a scaling methodology. So maybe should I enter my entries? Okay, so if I want to buy 200 stocks of Apple, for example, should I buy them all at once, or I should buy 50 after 2 days, another 50, for example, and so on? Okay. The take profit signal is when to take profit, basically. Take profit style, it can be also a market order or a limit order. The position sizing is the maximum position, and the number of stocks you should buy. The stop loss, where to put our stop loss. The take stop loss style, it can be aggressive or passive. And the bailout, and the thing that happened that caused you to get out of the okay, it's opposite to the direction you are betting on. Okay, so deployment process. We can see now the process. You can hear me, right? Okay,
Yes,
sorry.
now it worked better.
So I was saying that the bailout indicator is any news that is opposite to the direction we are betting on. And if we bought a stock, any news that tells us it's gonna go down, short it. Okay. Now we're gonna talk about the deployment process. Let's see what is the deployment process. A process on how to create a perfect working strategy. Okay, so basically the steps. First of all, you have to come up with a strategy, okay, with a strategy idea. Now, this happens when you are trading. So I'm trading, and I realized that when earnings comes out, okay, and if the earnings are higher than the expected, than people expected, price will go up, for example. I noticed this many times. So I say, maybe this work as a strategy. Okay. So I have this idea as a strategy. Now I make a research. I see, is there a reason for that to really work? Is that really something logical that work. So maybe, okay, when earnings are higher than expected, so investors are more interested in this stock. So this is a logical reason. Okay, so you go to step 3, which is back testing. Can be done by observing charts and see if your strategy would work on past trades. Okay. What does that mean? So we look at the chart. We see when this company released the earnings, for example, in our example, and we see if it's really working. Okay, so this works only by observing the chart. The step 4 is paper trading, which is, as we talked earlier, it's trading fake money. Okay, so you try this strategy on fake money first. Why we should risk our real capital? Okay, in testing, we test on paper money. Okay, so and you record your trades and you see if the trades are, you see the results. Okay, if the results are good, so step 5 is result analysis. You calculate the batting average, you calculate the win-loss ratio, you calculate all these metrics and see if it's good. Okay, you see if this strategy is really profitable. Now, if the results are good, you can proceed to step 6. Okay. Otherwise, you have to go back to step 4 and do more research. Okay, and you can repeat going back until you give up on your strategy. Okay, you say, okay, this strategy doesn't work. Okay. Now, step 6 is live trading real amount of money. Okay. But a small amount of money, not directly we put the big amount. Okay, if everything is good, everything is fine. If here in step 6 you're gonna face your emotions, okay, while trying the new strategy. If everything is good, you scale up and put more funds into the strategy, and this is basically the whole process. Now remark, guys, think of your strategies as an employee that you have. Okay, if the strategy is doing good, okay, you give it more money. Okay, if like you have more than one strategy, the most working one, the most profitable one, you give it more money. Okay, and in this way you can create a perfect strategy. This is the let's start with the fun begins. So before we directly start, let's talk about some definitions, okay, that we need. Shares float, I think we should know by now what is shares float. This was in the second workshop. Is the number of shares that are currently available on the market to be traded. The number of shares currently available to be traded in the market. Now the short float is something new. The short float is the percentage. What's the difference between shares float and also, Kaban, we talked about this in lecture 2. Shares float is the amount of shares that are traded in the exchanges. Okay, the shares outstanding is the total amount of shares that a company have. So let's say a company have 1,000 shares. Okay, the short float is 5,000. The other 500, sorry. The other 500, where are they? They are capped by the company, private. Okay, and it can be traded by big investors privately, not on exchanges, not on Nasdaq or New York Exchange. It's privately between the investors. Now the short float is the percentage of the shares in the market. As you short float that are shorted. So let's say of shares that are shorted in relation to the shares in the float. Okay, in the float. Okay, the short ratio is basically how many days for the short sellers to cover their positions. So let's say all the short sellers today want to close their positions. Okay, you know that shorting is more complex than buying, because shorting, you are borrowing stocks from a person and you have to give them back. So if all of shorters want at the same time to give the stocks back to their owners, how many days that it would take? Okay, how many days? Because a broker might find a problem matching and giving the stocks back to the owner. Okay, the relative volume, we talked about the relative volume before. It's basically the ratio of the current volume over the average volume. We talked about that, I believe, in the second, maybe in the second lecture, okay, or in the third lecture, sorry, which is basically, so if it's higher than one, then the volume today is unusual. Okay, people are buying or selling more than usual. If it's less than one, people are not, there is no movement in the market as usual. Okay. So let's now analyze GameStop. GameStop short float before its price explosion, guys, that day in January 27, it was 140%. Okay, what do we mean? 140%. So all the short float was shorted. Okay, and what about the 40%, which is above the 100? So even the shares which are kept private by the company are also shorted. See how many stocks are shorted in this scenario. Is a very huge number. Okay, so literally all stocks are shorted, literally. Okay, there is no one that is buying this stock. All of them are shorted, and the short ratio was around 40 days. So if all shorters want to close
Marwan, can you please repeat because it's lagging a lot.
all the shorted before it happened as well. Okay, so I'm gonna repeat. Okay, so what I was saying is that all the shares were shorted. Okay, and it will take 40 days for the shares to be if all traders want to close their trading position, it will need 40 days. Okay, so here is 80%, but this is after what happened. Okay, before it was 140%, as you see here. Okay, so let's see what happened. So this is a chart. This is the chart of GameStop. Okay, so what happened? We said that it was 100% were shorted. Okay, so all people trading here are shorting. Okay, all of these people are shorting, and when this jump happened, what does this mean? This means that all people over here are losing. Why? Because if you shorted, you lose money when the price go up. Okay, so the price went up. Literally, all people who traded GameStop are losing. Okay, so what happened over here? It went a little up. Maybe someone did this, and we all know who did it. It's basically Elon Musk and Wall Street Bets and Robinhood. did this. Why? Because maybe they bought stocks over here, so they caused this push, and then they posted about it over here. So people started buying it. Where people started buying it, guys, it started going up. When it started going up, these are losing more. So they started closing their positions. Now their positions are short. So the opposite of shorting is buying. So when they close their position, they are actually buying. Okay, so they are also pushing the price higher as more and more they buy. Okay, and this is like a snowball effect, which caused this a huge explosion that happened. Okay, any questions about this? It's very important. If you have any questions, please ask now. And please, someone say if you can still hear me good.
Yeah, we can hear you really well.
Okay, great. So this is what basically happened. Okay, it's a small, so investors who shorted ended up buying at higher price. Why do you think Elon Musk would do this? Okay, I'm gonna answer the questions. So for Faris, investors who shorted over here, when the price is going up, they are losing. So what should they do? They should buy the stocks back and give them to the owner who they borrow it from. So when they buy it, they also push the price a little bit up. When they push the price a little bit up, another investors over here who are shorting also get triggered and bought, and this is what caused this. Okay, and more people buying from social media, which caused this. Now, why did Elon Musk or anyone do this? So what I believe happened is that someone, maybe Elon Musk or Wall Street Bets or Robinhood, bought over here. Okay, so let's say Elon Musk. Okay, so Elon Musk took a look at this and saw that there is 140% of short float. Okay, so he looked at this and he said, okay, I want to cause problem to the shorters, so that when I buy, they buy and they take the price up, because the stock market is a zero-sum game. If someone lose, the other one is gaining. So what I think that Elon Musk did is that he bought over here and pushed the price up. Now that wasn't enough for them to make this explosion, and that wasn't enough to trigger these shorters. So what did they do? They played with people. They posted that GameStop will go up. They didn't actually post that because they love you. They have intentions behind that because they already bought, and I'm 100% sure of that. They already bought over here. And when they posted, people started buying, pushing this up, and then these shorters started to buy back their stocks, and this happened. Okay, so yes, this is what basically happened with GameStop. Now, one mistake happened is that people started buying at high prices, which is, you shouldn't do that, because always when this happens, at last Elon Musk who bought over here, or maybe the people who bought over here, will at last sell, right? So you can't, so if you bought here, these people sold and take the price down and you lose. Okay, you lost money over here. So always like, don't go with all people. What I usually do is that when I hear unprofessional people saying you should buy, I go and short. I always do the opposite. Okay, and yes, I did that. I bought over here, then I sold after the explosion happened. Then when people started saying go and buy GME, I went and shorted over here, and then the price went down. I made double profit on this. Okay, so you always should take care about going with people. Okay. So we have more questions. Where can we know the short ratio information? It's on finviz.com, as I showed you over here. Okay, so let me go back. This is Finviz. Okay, you go over here and you click on GME, and you can see these. And I'm gonna talk about like, how did I know that I should search for GME? I'm gonna tell you how later. Okay. So why were many people shorting in the first place? I don't know actually. I don't know. Maybe because they think that this stock is bad and it will go down to zero. I really don't know, but it may be something like this. Okay, so let's continue. So the big question is, were we able to anticipate this move and take advantage of it? So the movement, guys, was up by 1,213%. So if you invested $1,000, the return was 12,000. If you invested $10,000, the return was 120,000. See how many the numbers are big. Okay, it's a huge profit. So were we able to predict that and buy GME before this explosion happened? The big answer is yes, we could, and we did that. Okay, we actually did that. And how? Okay, the question is how. The answer is by the short squeeze strategy. So yes, I'm gonna give you the strategy that I used and Elon Musk used, and all investors who bought GME before the explosion happened used the short squeeze strategy. Okay, so let's go into it. So what is the idea of the short squeeze? When everyone is on short, okay, I want to buy frantically to cover their position, the price will push up. Okay, this movement will push the price to go up. Okay, because we know that yes, we know that if you buy a stock, okay, if you buy a stock, you take the price up, and if you short it, you take the price down. So when all shorters want to buy their stocks back, okay, they're gonna take the price up. Okay, and we know that shorting is for more advanced traders because it's more dangerous, and it's for short-term traders, and they got to have a stop loss, so they can't keep it forever, the shortings. Okay. Okay, so the concept is people who are short will at last buy. So we know that the price will go up if they started buying at the same time. Okay. However, for them to buy at the same time, guys, they must be in a problem. Okay. So first you saw that GME, there were many shorters. Okay, but there was nothing happened. Everyone was happy. But when shorters became in a problem, okay, after someone pushed the price a little bit up, this happened. There must be a problem. The shorters, for them to buy at the same time, there must be a trouble, right? So let's see. Therefore, for a short squeeze to happen, the following conditions: you have a high short float, you have to have a high short ratio, and a high relative volume, because high relative volume tells you that there is something happening in the market. Okay, and short sellers must be in a trouble. Okay, short sellers must be in a trouble. That is very important. So let's check when short sellers are in a trouble. Let's take this. This example. You have this stock ASLN. Okay, it's now over here. Okay, the short float is 68.5, and by the way, this is very high. 40% and above is very high. Okay, now 140% is something that I saw for the first time. Guys, to tell me, are shorters in trouble over here or no? Answer. Do you think that a short squeeze will happen now and the price will go up? So what do you think? Okay, okay, I will answer. So as we see over here, actually the short sellers are not in a problem. Why? Because the price were already over here, okay, and they weren't in a problem. Okay, so the price is now here, so of course they are not in a problem. Okay, now let's take this case. This stock, PLBY, the short float is 51%, which again is very high, and C, Now, is because the price over here is the highest
Could you please repeat because I think it was lagging.
okay, so this means investors are losing. Okay. Price. Shorters. Okay, yes, sure. In a big point, you can hear me, right? Guys, you can hear me?
Can you repeat the last slide because it was lagging a lot?
You can hear me now, right?
Yes.
Okay, tamam. Okay, so what I was saying is that now, in this case, the price is over here and the short float is 51%. So are traders in a problem? Are short sellers in a problem? The answer is yes, they are. Why? Because the price is the highest among the other times. Okay, so when it's the highest, so all people who are shorting over here are in a trouble. Okay, so you know that every single person, wherever he shorted, if he shorted here or here or here, anywhere he shorted, he is losing money. Okay, so here, yes, the short sellers are in a problem. So yes, there is a probability of short squeeze, and also we have a high relative volume. So usually the volume, as you see down, is around this. So here we have a big volume. Okay, so yes, here it's a short squeeze is and will happen. Okay. Okay. So now is screening for stocks. Okay. Now, someone said, how do you find that? Someone asked, how do you find if a short squeeze will happen? Okay, so this is our now idea, okay, or something that we need to explain. How to find stocks that are exposed to a short squeeze simply by using finviz.com, and I'm gonna explain how. So let's see. Okay, guys, what you can see here, okay, it's simply finviz.com, okay, and you click on screener when you enter the website. You click on screener, then you click on custom. I hope you guys take notes of these. Okay, so finviz.com, we entered this before, then screener, then custom. And when you click custom, then if you click settings, you're gonna have these filters. Okay, so you can check the float short, which is the short float, and the short ratio. And we also need the relative volume. Okay, so we need these three. So here are they. They are shown now over here. So if you click on the short float, it's gonna show you in a decreasing order the stocks that have a high short float. So over here we have ASLN. I showed you it before. Have a 68.5. Okay, so you check if it's in a trouble. Okay, if it's not in a trouble, you go down to ATNF and you see if it's in a trouble. Okay. Now, I usually do this every week. So every Monday, I enter finviz.com and I see what stocks have a high float short and a high relative volume. Okay, and I trade them. I see where a short squeeze will happen and I buy. Okay, so that day I saw GME here and on the top and 140%. So I was like, I'm gonna go buy right away. Okay, so in this way, guys, if you did these simple steps back in January 13, you have anticipated what is gonna happen with GME, and you would have made 1,200% profit. Okay, so you would multiply basically your investment by 12. If you invested $1,000, your profit was 12,000. Imagine how huge this was. Okay. Now this is the trading plan of the short squeeze strategy. Okay, we said that we have a trading plan. So what is the trading plan? We have the strategy. It's the short squeeze strategy. It's the style day trading. The type swing trade. The holding period is few hours to maximum 2 weeks. Okay, what does that mean? I can't close my position before like 3 hours or to 4 hours, and I must not wait more than 2 weeks. Okay, this is the holding period. Stock selection, which stocks I should look at, which stocks are eligible. Okay, high short float, high short ratio, and momentum type stocks, but it's not necessary. That's why I didn't put the type momentum. And a high PE ratio. Now, forget about this for now, and no dividends, forget about these for now. Okay, and these are not very important. Okay, but it must have a high short float ratio, a short float, sorry, a high short ratio, and also a high relative volume. Okay, so the entry signal when we should buy, breaking a 50-day high or a 52-week high. What does basically this mean? Breaking a 50-day high, which means that we reached a point which is the highest point in the previous 50 days, or 52-week high. We reached a point which is the highest point during the entire year, which is basically more stronger if you looked at a 52-week high. So when you see this, this is the entry signal, go buy it. Okay. So when I looked at the GME, I saw that it's higher than not also 52 weeks, which is 1 year. It's higher than I think 2 years maybe. I don't really remember, but it was higher than a big period of time. So I went. This was an entry signal. So I'm buying right away. Entry style aggressive market order. So it's a market order. I want it now, right now. Whatever the price it, I want it now. Okay. The take profit signal is 10% or a trailing stop loss. So usually, guys, when a short squeeze happens, the price goes up around 10%, 15%, mostly 20%. But in GME, it was a severe case because, you know, Elon Musk and Wall Street bets exploited the people using social media. Okay, so and also the short float was 140%. I haven't seen anything like this before. So that was an exception, which is exploded 1,200%. A trailing stop loss is a stop loss which is also always going up. Okay, so if the price went up, you increase your stop loss. Okay, you make it higher. The take profit style is a limit order or a market order. The position sizing, as we discussed earlier, it's 2%. The stop loss is below 50-day high or 52-week high. Okay, so you place your stop loss there initially. If you're using trailing stop loss, it's gonna go up with time. Okay, take loss style, it's a limit order, as we said, below 50-day or 52-week high. Bailout indicator, any type of negative news. Okay, because the short squeeze, this means that the price will go up. So we buy any negative news that you are sure about. Not your friend came and told you the price will go down. No, any professional news that says the opposite, that the price will go down, you have to bail out and you should close your trade. If you were winning, if you were losing, anything. A bailout indicator is you have to stop now. In case of GME, would you go for a higher position sizing if the profit signal is higher? No, because how would you know that the profit signal is higher? Yeah, now yes, يعني, actually I did that, but I don't advise people who start trading new to do that. Okay, so when I saw that uh, people are being exploited on social media, yes, I didn't put actually 2% of my account. I put a lot higher. Okay, but I don't advise new traders to do that, because new traders doesn't always know when when this event is unusual. Okay, so here GME was unusual. Okay, now I saw it unusual because I already did short squeeze millions of times before. So I knew this one is perfectly different. Okay, I knew it that this one is different and the profit will be higher. So I put it more of my account, but I don't advise that. Okay, because that is actually taking more risks. Okay, if you want to take risks, you can do it. Some people doesn't like to take risks, so it depends on you. But I don't advise you to do that when you start trading new, because you won't be able like to really spot the things that are unusual from the things that are normal. Okay, so this is the trading plan for the short squeeze strategy. And now, what is the next step for you guys? So we reach for the end of this workshop. So as you see, guys, if you use, so you see, guys, this is, to be honest, this is the most simple strategy that I have and that you can find out. Okay, short squeeze strategy is very simple. As you see, it needs a lot few work. Okay, and it makes a lot of profit. Okay, now with the case of GME was very big, but it usually makes 10 to 15% per trade. You know that investors actually their goal is 8% per a year. Here you have 10% per one trade, which happens again between few hours and 2 weeks instead of 1 year. So this is very powerful. Okay, so using this simple strategy, you can make a lot, but you have to have a strategy, guys. Strategy is the most important thing, along with risk management and trading psychology. Okay, you won't make money without strategies, without risk management, and without trading psychology. Therefore, what is the next step for you guys? You should now, we finished this series of workshops. I hope that in the future, I'm gonna work on that to do more workshops. Okay, but what you should also do at the same time is that you should go research and learn by yourself. Okay, now these, if you add up all these workshops, they are around 10 hours or maybe less, around 7 hours. Okay, for example, the courses that I give are around 50 hours. Okay, so now like you have 7 hours out of 50 hours. So you see, يعني, what I want to tell you is that you shouldn't stop here. Okay, you shouldn't go and start trading now. There is more research to do. There is more things to learn, a lot more. Okay, you see how much information you got from these workshops. There are literally times 10 that you still need to go research and find. Okay, after that, after you research and you have the big knowledge, okay, I think I told you this before. After that, you have to paper trade. Okay, but even if you are paper trading, you have to record your trades. Okay, always record your trades and calculate your batting average, calculate your win-loss ratio, always put them in an Excel sheet. And I'm gonna share with you an Excel sheet that I use in order to track your tradings. Okay, so it's basically an Excel sheet which have like the date where you bought, the date where you closed your trades, the holding period that you did. So everything you need to record your trades. And at last, you calculate your batting average, your loss ratio, and you see how you are performing. Okay, usually do that on monthly basis. So after each month, you stop and you calculate this. You see that, okay, in January I did this. In February, well, I'm better at this point, but another point, I need somehow practice on it. Okay, so you should do that even if you are paper trading. After that, you put a small amount of money, because to train your emotions. Okay, because paper money, it have emotions, but not like very big emotions like the one that you're gonna face when you trade real money. So first of all, you put a small amount of money. Then when you feel that you are strong emotionally, you can control your emotion. In other words, you are heartless now in the stock market. You put the real amount of money that you want to trade with, and you are ready to go. So this is the next steps and the process for you, which every professional trader passes through these processes. Okay, every professional trader, and you can't skip this process. It's somehow a long process, but it's the only way. You can't skip it. It's the best way to ensure that you're gonna be a profitable and professional trader. Okay. So thank you guys a lot. This series of workshops was really the best thing I did this year. I really enjoyed this. I hope you enjoyed it too, and I hope you really learned something from these workshops. I want to thank you very much. And now the floor is open for questions. And we have the first question: how about investing in index funds as a beginner? As a beginner, yes. يعني, if you want to be a day trader, investing in index funds will not make you practice for day trading. Okay, it will make you practice for investing. Okay, so you can invest in index funds because they are the probability of losing is a lot lower. Okay, but also for sure I advise you to go and read and research about index funds investing before you go for it. Okay, but yes, if you want to be an investor, not a day trader, yes, it's a good first step. So any other questions? So let me stop sharing. Okay. So if someone have questions, please, you can ask now.
How did you learn the trading strategies? Were self-learn or university?
Unfortunately, there is no university major which teach you this. Let me tell you why. Because universities teach you and schools teach you how to be how to serve your community. Okay, stock trading is only serving yourself. You're not serving your community. So that's why you can't find a school or a university major which teach you this. Now, how did I trade? How did I learn it? This took me around 6 years. Since I was 14, I was learning this. I learned like 2 years on YouTube, but this contributed in only 10% of what I know now. Because what you see on YouTube is 100% working strategy using Bollinger Bands, and you go and implement it and you lose your money because that's not a strategy. Or they tell you a strategy using a triangle. That's not a strategy. I told you that's not a strategy. That's a entry signal. Now, after 2 years of learning on YouTube, which basically I only learned terminologies, only that. There was a trader who taught me all of this. Okay, he is the friend of my brother, and he is a trader. He have nine years experience. So he taught me that, but of course I paid him in return. So Yes, that's when I learned everything, and then with practice and with experience while trading.
Did any books help you?
To be honest, I didn't read any books. I only research like trading isn't like physics or engineering subject that you can learn from reading books. Okay, everything related to finance and business, you only learn it really when you go and implement it. Okay, without implementing only reading books, that won't help you a lot. It will help you in having some ideas and having some definitions, all of these, but it won't really make you make money just from, and you can't read a book and just go and put $10,000 and start trading and making money. No, that won't happen. The process that I told you, you should go through it. You should research, maybe buy books, maybe on someone teach you. Now, this is the hardest thing. Then you should put paper money, then you should put a small amount of real money, then the big real amount. So this process, you should go through it.
Like, what platform do you use? Interactive?
Yes, interactive brokers for broker. I use for screeners and charts. I use TradingView, and for news providers, I think we shared with you. I don't know if we did. Yes, we did. We did share with you an Excel sheet which have like many news providers, many screeners, many brokers. Basically, I use some of these. The news providers, I mean, I use almost all of them, like Bloomberg, Yahoo Finance, all of these.
Thank you. Thank you very much.
We'd like to
You're
thank
welcome.
everyone for watching this course. I hope all of you enjoyed it and learned something. And Marwan actually does teach even more things on the side. He actually runs Alpha Trading, so he'll talk about his actual like company or trading platform. So Marwan, please.
Yes, I said it before. I already did develop like 4 courses. I'm working now on the 5th course. Now, these 4 courses, as I told you, they teach trading from, yani, all these 6 years of me learning. Uh, I add them up. I combine them all in 4 courses. Okay, so these 4 courses can be a shortcut for this path of learning if you want. Now, the 4 courses, the first, second, and third course are like the first course is usually about technical analysis and risk and money management and trading psychology, which you saw you saw some of them, okay, in this series of workshops. The second course, I teach the fundamental analysis, which is very big. And the third course, I give all my, not all my strategies, I give like 5 of my strategies. One of them is short squeeze. In course 4, I trade live in front of students. So I open a real account funded with real money and I trade in front of you. So we analyze together and we trade together. Okay, the 5th course will be about cryptocurrency, hopefully. It's going to be only about cryptocurrency, so it's going to be specialized about cryptocurrency. And also, I'm trying to work on a 6th and 7th course. The 6th one will be around about Forex, and the 7th one will be around trading using robots. Okay, so coding algorithms which trade for you. Okay. I'm still working on these.
Well, if no one has any more questions to ask, thank you everyone for attending, and I'll be sending the recording and everything very soon.
Thank you all for attending, and really it was very enjoyable explaining and meeting you all. Thank you very much.